Hello guys, it's a one and only Forex Q Coach Team Legend, and I'm super excited having you guys in this training. Okay, so this is how to trade the candlesticks and catch spikes in the crash 500 index under the 1 minute time frame. Okay, your zoom level is 2 from the lowest. Then your zoom level is 1. Okay, from the lowest, the second one. Okay, so it's a very simple strategy. Okay, and there's nothing complicated here. Only just what you do is to follow the instructions. Okay, before we begin, if this is your first time on my channel, can you do me a favor and hit the subscribe button and turn on the notification bell so you get notified whenever I release videos like this, because on this channel we keep releasing awesome strategies to win. And if you notice, the date is 4th of December, so we don't post videos of 2 days or a day ago. We post our videos the moment we make it, so that as everybody is watching it at the same time, we are winning together. That's how we roll in this channel. So do me a favor and hit the subscribe button, turn the notification bell on. Alright, so if you've done that, thank you very much. I appreciate, and you will always get notified. Okay, so before we go to the business of today, I want to inform all those who purchased the JWS Strategy 6 to trade the boom and crash. Alright, those who purchased it, I have updated the strategy and I have uploaded the video on my private YouTube channel. So all I just need you to do is for you to take a screenshot of your evidence. Take a screenshot of your evidence that you purchased the JWS Strategy 6 from me. Alright, and send it to my Telegram. Okay, the link is on the description below. Alright, so just go straight to your WhatsApp, take a screenshot where you purchased the JWS Strategy 6 from me. Once you take the screenshot, click the link on the description of this video right now. It will take you straight to my Telegram, and then send me a private message with the screenshots so that I will see and verify that you have purchased the JWS Strategy 6. Then I will give you the new link to the updated video so that you watch the latest updates on how to keep using and keep winning with the JWS Strategy 6. And if you haven't purchased the JWS Strategy 6, I want to advise you to do so. It costs nothing less or more than $10. Okay, it's very cheap. That's how we do it in the Bullish Way Academy. Alright, we want everyone to be rich together. So that's why we don't put our strategies so high that you can't purchase it. We want everyone to make it together. So it's as low as $10. Come and purchase it and start using it to make $100 plus every single day. Even the lowest accounts, people, we've been getting testimonies from even people with $10 accounts. They are boosting their accounts right now to $50, $60, $80, $100 plus. And that's just the thing, guys. The JWS strategy enables a beginner trade like a pro. That's the beautiful thing about the JWS strategy. You trade like a pro as long as you follow the instructions in it. Okay, yeah. So let us go straight into the business of today. So how the strategy works. Alright, let's go to the settings before we talk about how it works. So the settings are, we have our awesome oscillator and we have a relative strength index. Okay, so in our relative strength, in our awesome oscillator is a normal setting. Alright, no level, just the normal setting. Make sure your value up is green and your value down is red. Okay, and then our relative strength index, do not worry about all these ones. I'm using them for something else on another trade. This is just what you should focus on, these two. Okay, so in our relative strength index, we have a period to be 8 applied to open. Alright, 3 pixel. And then in a level, we have so much levels. Just take a screenshot of it. Okay, take a screenshot and make sure you put all of them. If you know you don't want to fail in this strategy, make sure you put all these levels you see here. I'm gonna scroll up a bit. You can take a screenshot of it. I'm gonna scroll up a bit. Wait. Okay, these are the levels. Okay, or maybe let me mention it. We have 62.61, 71.28, 53.95, 34.8, 58.51, 46.96, 26.36, 82.81, 76.53. Okay, we have 87.89, 91.03, 80.81, 17.73, 66.82, 96.97, and then we have 10. Okay, this is where we call the lowest, or let's say the limits. All right, or let's say the limit of sales. Okay, the limit of sales, and then we have 91.03 as the highest, or let's say the limit of buys. Let's say buy limits. Okay, let's just put it buy limits. And then we have here sell limits. Okay, the other ones, these other ones, you can name them as possible spike. Okay, possible spike, all of them, because according to our strategy, each of these red lines, there can always be a spike in each. Whenever the trend is close to each of these red lines, there can always be a spike, so you need to be careful and stay off the market. Okay, let's take a back test. Let's take a quick back test right now. If you notice, okay, I'll move this right now. When the trend got to this line, 58.51, a spike took place. When the trend got here, the spike took place. When the trend got close to the line, the spike took place. When the trend got here, the spike took place. Okay, when the trend was close here to this line, 76.53, the spike took place. Now you might be wondering, why did I paint this place red? I painted here red because this is a very dangerous area. You see this area between 76.53 and 34.80 is a dangerous area. Why do I say so? It's an area where a lot of spikes do occur. Let's take a quick look at this. You can see this area, so much spikes. Okay, you can see this area, so much spikes. All right, you can see so much spikes. So a lot of spikes do take place at this area. So this is the area you need to make sure that you always watch out for and be careful. Okay, and then another thing to observe is this 96.97. Wait, 96.97. Okay, this is the buy limit. Sorry. Okay, so you can also leave this one too. So is a buy limit. So whenever the trend gets to the highest limit of buy, the buy limit, which is 96.97, all right, there's always tendency for spikes to begin to occur. Okay, there's every tendency that for spikes to always begin to occur, so that the trend will go down, because the spike is what is going to take the trend down again, while the candlesticks will take the trend up. So that is why spikes keep occurring, so that the trend will keep going down till it gets to the lowest limit, which is the sell limit. And when trend gets to the sell limit, then you start noticing, when the trend gets to the sell limit, you start noticing the candlesticks starts coming up again. Okay, as you can see, the candlesticks started coming up again with one spike and started coming up again until it got to this level again, and spikes began to take place again. You can see. All right, so there's one thing we should also observe, that so sometimes the market might not get to the lowest limit before it starts going up again. So the fact is, just take note that at least between the 10.00 and the 17.73, you can take those two lines as your sell limits, and between 96.97 and 91.03, you can take it as your highest buy. Okay, so whenever the trend gets to the highest buy, you should start expecting spikes, so you can place your trade for spike. And I advise you, if you have a 2-figure account, stay off looking for spikes so you don't blow your accounts, because sometimes you might look for a spike and then you just notice that the candlestick keeps trending and spike doesn't occur. Before you know, you blow your accounts. So if you own a 2-figure account, what I mean by 2-figure account, I mean $10, $20, $30, at least up to even $90. That's a 2-figure account. Stay off looking for spikes. Keep trading the candlesticks. You can make a lot of money from the candlesticks than looking for the spikes. Okay, so I advise you guys. Okay, and if you have a 3-figure account plus upward, then you can chase for spikes. And even if you're chasing for spikes, make sure you stay on a very low lot size. Okay, stay on a very low lot size. Don't be greedy. You want it all, so therefore you put a whole big lot size, and in the name of you want to catch one spike that is going to give you $1 million a day. It can happen, guys. It can make you blow your accounts. So if you want to chase spikes, stay on a low key. All right, and if you want to catch spikes, whenever the trend is getting close to any of these lines, you can place for a spike. Okay, because a spike might occur, especially when the trend has gotten to a level where you can see so much spikes in between these lines. You can place for spikes. Okay, so remember, don't forget, if you own a small account, don't trade after spikes. Trade the candlesticks. You're gonna make money from it. But if you own a big account, then you can go for spikes, but with little lot size. A lot of people kept on asking me, hey Tim, how with a small account, how many positions should I open? If you own a 2-figure account from $10 to $90, I advise you to stay on 2 positions. Okay, no, from $10 to $50, stay on. From $10 to $30, stay on 2 positions. All right, from $10 to $20, stay on just 2 positions with the lowest lot size, which is 0.20. From $30 to $50 or $60, you can open 3 positions. From $60 to $90, you can open 4 positions. Stay on a low lot size. From $100 upward, you can open 4 positions. Stay on at least 0.30 lot size. Okay, so that you don't blow off your account, and be vigilant. All right, if you're chasing after spikes and you notice the trend, the candlesticks are still going and spike hasn't taken place, and you have lost up to $1, stay off the market. Don't be greedy because you want it. You might end up losing $4, $5, $6, and at the end you just notice a very small spike. You can see all the way from here. Imagine someone who was waiting for the spike and it's got up to this level only to spike this little. It's gonna get you upset, but only if you have faith. Anyway, you see other spikes, but you just need to be careful. All right, so I hope this video be helpful to you guys. Don't forget to leave a comment. If you observe, you see that when the trend got to this level again, this 46.96, the spike took place again. All right, when it got to this level of 17.73, the spike when it got to this level, the spike took place. Now it's going up again. So at this level that is on this line, I expect you to stay off the markets and allow it to go up. If you guys observe, okay, when the trend got to this level of 46.96, the spike came down. Okay, if you notice, now when the trend got to this level again, close to the 26.36, what happened? The spike came down again. Now let us now working with your awesome oscillator. Your awesome oscillator lets you know when it's safe to enter the market. All right, if your awesome oscillator shows you green, it means you're good to buy. But once a spike takes place, a first red line shows up and others red lines keeps showing up until green lines start showing up again. So you have to stay off the market until you see green lines come out from this awesome oscillator, and not just one green line. You must allow at least 2 or 3 green lines to show before you start buying. If you notice very well, let me zoom this a bit. Remember, your zoom level for this strategy is is zoom 1, from the lowest, zoom 1. Okay, so I just want to zoom it to show you guys something. Okay, so if you notice, there was a green line here, right? That green line was telling you you're good to buy, but it's not enough signal. You have to allow at least 1, 2, 3 green lines to show up before you enter the markets. All right, so not just because, oh, I've seen a green line, then let me buy. No, it does not happen that way. You can see what's happening, guys. You can see what's happening. A spike has taken place again. That's because your relative strength index is telling you just stay off the markets. Spikes are still occurring. Stay off the market. So until you see at least 3 green lines or 4 before you place your buy again. Okay, that's to get your proper signal. If you take notes, when this spike took place, this was the first candlestick. As you can see, this was the first candlestick, and then other candlesticks, other red candlesticks kept on showing till the green line came up. Okay, so if I were you, I will place my buy like here. All right, from here I'll place my buy. That's when you have good confirmation that it's time to go. But if you enter your buy from here because you saw one green candlestick, it could be dangerous, just like what just happened here. Okay, so I hope this strategy works for you guys. As it's working for me, let it work for you guys. Don't forget, if you haven't purchased the JWS strategy 6, come and get it now, guys. It's still on a low price of $10. All right, if you have any question, don't forget to leave a comment below. I'll be happy to reply. Thank you.